Hello, I'm Bob Gorley, the Chief Technology Officer of OODA LLC. This recording captures content from our 18 October 2022 OODAcon. OODAcon was an event designed to bring together people from our community to talk about this age of exponential innovation and disruption so we can all learn how to better survive and thrive. This session is on the future of money. Matt Devost interviewed Raymond Roberts, CEO of the Bowen Group. Raymond is an experienced CEO and entrepreneur and innovator who's also spent years studying cryptocurrencies, how they work, and what their potential value will be.
All right, so what's interesting for me about this panel, and thanks for joining us, I'll let you give an introduction, kind of your how you discovered Bitcoin in particular and cryptocurrency, is that I first wrote the panel description in 2019 in anticipation of a 2020 event. And the world went crazy in the interim in this regard as it relates to blockchain, cryptocurrency, Web3, NFTs, etc. So love to get your perspective on how did you get introduced to these concepts and what was the appeal?
Sure.
Originally.
First of all, my name is Raymond Roberts. So I began the first part of a 10-year sabbatical back in 2012, and I had an interest in trading commodities, Forex, that kind of stuff. I just wanted to kind of dabble in that area, and came across a couple people that were working with Bitcoin, and had an opportunity very early on to read the original white paper. Stared at it in absolute bewilderment. I was like a hog looking at a watch. I was trying to figure out, what did this mean? How did it work? What was it about? And there was a golden moment where I kind of figured out exactly what the value of Bitcoin was and what it meant and how it worked. And I remembered I just couldn't stop thinking about it. And I started working on a number of projects that incorporated digital assets in a social network. This is back in 2013 and 2014. And it was just began a stream of thinking about the possibilities of this technology, which is really blockchain distributed consensus networks, and what it meant. And back then, you could see the rise of Bitcoin pricing. By the way, it was there was only a few assets that were like it. I remember at one point there was only like less than 100 of these token coins projects that had been started. And you could see the rise of Bitcoin just moving from like nothing, right, micro pennies. And then eventually, by the time I started really paying attention, it was like in the hundreds of dollars. It was a couple $100. So there was a lot of excitement back then about what that could be. And then you can see over just a 10-year period where it's gone to.
Yeah. Excellent. We discussed this earlier. You know, my original interest, I used to hang out with some of the cypherpunks in the early 90s.
Yeah.
In fact, Douglas Engelbart was mentioned this morning by Vint Cerf. I have a photo of myself with Eric Hughes, original cypherpunk, Douglas Engelbart, and Bob Stratton, who I don't see in the audience, but will be here later. But I think, we kind of jumped ahead on Bitcoin, but I think there's a broader conversation to have here, and that is around the concept of money.
Yeah.
So what is money, and why do we feel like it's going to be disrupted by these technologies?
So that's a great question. So the history of money, like you've got to kind of look back and think about what money is, right? So money is a unit of account. It's something that we agree on, and I know the previous speaker did nail it. It's something that it's a social construct, and it's something that we agree on that has an exchangeable value between us. It's a unit of account. It's tiny, it's small. Think back about the entire history of money, right? It's a human construct. Started a long, long time ago, probably 5,000-10,000 years ago. Somebody said, or somebody thought to themselves, I've got food, you have grain. How do we exchange food for grain? And that began the system of barter that probably always existed between human beings. But then at some point, somebody realized that a deer is not that divisible. Right? Can't get a handful of grain for a deer, or whatever the units were. And probably someone came along, and clearly somebody came along with a sort of an intermediate object, something like a stone or a seashell. And for the longest time, stones, little rocks, pebbles, and in some cases seashells, were the mode of exchange between people. So it was an intermediary system of barter where you could fractionalize an object or the value of an object right down to like a handful of seashells. Problem with seashells is they're everywhere, right? So there's this concept of stock to flow, which I could talk about if you wanted to, but they're easy to get. And so over time, and this is technology, this is where technology kicks in. Over time, as technology improved, you can see money follow technology. So when someone invented smelting and started smelting copper or iron, you could see that the nature of money started to move towards those things that were difficult to do and could only be produced by a technology. For couple thousand years, coins were sort of that medium of exchange, the form of money that people used, different types of coins. A lot of problems with coins because you never knew where they were minted or who had it. And as smelting technology became cheaper and cheaper, you could see that people were sort of fabricating their own coins. And then, we think about one of the greatest inventions, which is the Gutenberg press, right? That invention led to the printing of notes, right? The creation of actual paper notes, which are much easier to move around than coins. But in between that was this movement towards very valuable objects like silver, gold, precious metal systems. I think it was Isaac Newton that became the keeper of how much gold could be, how much gold was worth, what it was worth to the bank, and then how much silver could be traded in for how much gold. I think it was Isaac Newton that did that. And then at some point, people realized carrying gold around is not very useful, so they started using printed notes as a substitute for gold. Now, the biggest thing that's happened, and it's happened, a lot of folks think that it happened in 1971 when we came off of the gold standard, but it actually happened in 1915 when the Bank of England came off of the gold standard to finance the First World War. And that was the first origination in sort of modern society of fiat currency. So for a very short period of time, there was quantitative easing back in England in 1915 to pay for the war that was happening in Europe by the British. Now they went back to the system of the gold standard, and it wasn't until 1971 that the United States came off of the gold standard. But there's been a period of time now where we've been operating in a fiat standard, not a metal-based standard, not a hard currency standard. And so this is a very new era of money right now. We've been at it really since 1971. Really, the whole world has been on this process right now, where the U.S. dollar is that backing reserve currency now. It's not gold anymore. It's the US dollar, and all other currencies in the world are really based off of the US dollar. Between the US dollar and the euro, you're looking at about 70 to 80% of the world's trades in currency.
What percentage do you think the US dollar will be of the global reserve currency in 10 years?
I think we're going to continue to be the dominant form of currency in the world. I think that the United States' ability to influence other countries and to maintain the system that it has right now is rather profound. And I think that as we move towards a US digital dollar, it's going to become more and more entrenched throughout the world. There's this tendency to trust in the U.S. economy. The U.S. economy, no matter how bad the world is doing, no matter how dark our economy gets, we're always the cleanest dirty shirt on the planet, right? So our economy always seems to fare well. We have a momentum of productivity and ability to produce and to move financial products throughout the world. We have this ability, plus we control them, right? It helps if you control the IMF. It helps if you control the World Bank. But we have this ability to continuously have this momentum, and then the rest of the world just kind of wants to feed off of that. There's 185 different currencies in the world, most of which you've never heard of. Like, you've really only heard of maybe 10 or 15 of them. And the rest of the world just has to operate either using the US dollar or some other object that's dependent on the US dollar. There's a great little story about Kenya. Kenya had a period of inflation that wasn't working for the average citizen. So what they did is they started using the local telephone network. They started using the point system on the local telephone network as a form of currency that had more value than the Kenyan denomination. And then somebody wrote an app so that they could trade cell phone points. And so this is really like the first Bitcoin. It's kind of an interesting concept. But again, they're really relying on that US dollar.
So one of the interesting things, if you talk about moving to like a U.S. Digital currency, is the transparency built into those systems. Yet we have a lot of economic value that is stored in kind of non-transparent systems, right? That we've seen revealed through Panama Papers, et cetera. What happens to that element of the global economy, the kind of the shadow economy? Do we have cryptocurrencies that marry up to it that are tradable? Does it become more transparent? Like, what would be your view in that regard?
So do governments want transparency?
Good question.
Right. So there's going to be this natural tension between the folks that live in a country and then the folks that they agree should be their government. But the government really doesn't want transparency. And with the advent of fiat currency, we've gone back to a time, and you got to roll back to the Bank of England, right? 1695. You got to roll back to why they created the Bank of England. It was to finance the King's Wars in France. Before that, there was no transparency. The king could just go out, wage war, run up huge debts, and figure it out, right? And the people had to pay for it. And so the bankers got together and said, "No more of this. We want transparency." But what's happened with fiat currencies is that there is no transparency. This is a really big issue, and I think a lot of folks, probably some folks in this room, are a little bit frustrated by the amount of debt that we accumulate through the fiat system, and we don't know how is money created. How is the current monetary system? How is it funded? How does a dollar come into existence in the current system? And it would be great to be able to see that. Now, when it comes to gold, something like gold, for the longest time, we knew exactly how gold was produced. Somebody went and prospected gold, went and expended labor, time, energy, food, all of these things, and came back with a handful of gold dust. And so we knew that there was where this dust came from, right? There was alchemy, right? People were trying to create gold. They couldn't do it, right? Gold is a very unique substance. And so the idea today is we'd like to have more transparency about where does money come from. When you look at something like Bitcoin, you know exactly where that money comes from. It's an algorithm. You know exactly how much Bitcoin is out there, 21 million coins. You know exactly the last date of the mining of those 21 million coins. It'll be I don't know the exact date, it'll depend on the clock, but it's somewhere in the year 2139 or 2140, right? We know exactly what the unit of production is for that and where it comes from and how it's in the market. We know exactly how many Bitcoin exist, how many Satoshis have been burned. We know this. The US dollar, we don't know. The euro, we don't know. Nobody knows how much. Nobody can calculate the size of the monetary systems that exist today with fiat.
What has surprised you the most about this space over the past 5 years?
So if I was to think about, the two spaces that I would think about right now is sort of the current acceptance of the fiat system. It's I never thought that we would produce so much debt in the world. We're talking about hundreds of trillions of dollars of debt. And then, that is a system that just exists. I would always think that we as human beings would start to demand that shouldn't be the case, that we would want to say, let's roll that back a little bit. Let's figure out, let's adjust that. Now, on the technology side, on the Bitcoin side, some of the things that and it's not just Bitcoin, it's all crypto, all blockchain. Some of the things that really surprised me was how rapidly the adoption of things like smart contracts came about. So when I was kind of working on this back in 2013, part of my thesis was that there were going to be smart contracts. There were going to be digital objects that existed only in a digital construct and that people would own them. I personally didn't know how that was going to manifest itself. I didn't realize how easy actually the engineering behind that is. But the idea that there can be digital objects that exist in space, that exist in cyberspace, and that people can own this and it's original. This is the only copy of it. Right? It's not like a photocopy. It's not like a PDF where you can share 500 PDFs of someone's book, but it's one object, you own it. What did surprise me about that was this this craze of NFTs where there were like these weird little images of monkeys that were selling for $1 million. Like I didn't get that. Like that was just shocking to me. The Bored Ape Yacht Club, right?
Yes.
And so that just kind of surprised me that would have become the media fantasy that would exist. And we're not talking about all of the other uses of things like NFTs, smart contracts, the idea of distributed autonomous organizations. That's brilliant, right? Like an organization that just exists in cyberspace, has no human beings, and it's really just a nexus of contracts that execute based on events that occur. And so to me, the rapid adoption, how rapidly this is being adopted, has been a surprise. It took 500 years for the printing press to produce a fiat economy. We've been handling what Satoshi Nakamoto did. We've been dealing with it now since 2009, and it's been this rapid. So I think that folks really need to pay attention to this, because I think maybe in the next 4 or 5 years, maybe 10 years, a number of things are going to happen that are just going to go right past us, and we're just going to go, what happened? Because we're not paying attention.
Mm. The Bored Ape Yacht Club was fascinating because I think that was also community driven.
Right.
It was people that wanted to find a sense of community amidst all this
Right.
turmoil that was taking place in
Right.
that space. But we saw the value creation elsewhere with, I think it was NBA had the Top Shots where you could basically buy the NFT of a particular
Right.
play.
Yeah.
And just over and over and over. I've joined some of them where I've purchased NFTs, and it really is about the community. It's about getting on the Discord.
It's like cards.
The economic
Right.
value, seems secondary.
Yeah.
What was interesting is you just had this crazy acceleration based on the perceived value of that community, of the value of those NFTs.
So part of the thing that scares me in this is that there are permission blockchains and there are permissionless blockchains,
Mm-hmm.
and there are far more permissioned blockchains, privately owned blockchains.
What you mean by that?
So a permissionless blockchain, you think about Bitcoin. So Bitcoin is a permissionless blockchain. Anybody can write to it. Anybody can read to it. It's completely distributed. There's no board of directors. There's no owner of a thing called Bitcoin. Okay, so that's it's a great first use example of blockchain. Most other blockchains, you think about the 20,000 tokens that came after Bitcoin. Most of those blockchains are permissioned. They are regulated and owned by a private entity or an organization or a government. That means they can disappear tomorrow morning. Somebody can change their mind. Somebody can rewrite the code. Somebody can alter how these tokens are issued, what their value is. Someone out there can do this. Bitcoin took the element of trust out. It said, we're not going to trust anybody. What we're going to do is we're going to trust 100 million ASIC computers mining and guarding this network, all running a single algorithm that nobody's really going to change. And when you start looking at permission blockchains, NFTs, right? So the NFTs are all on permission blockchains. What happens if somebody just hits delete, says, I'm done with this? What happens to your object, right? So that's where I start to question, what's the value? Like, I can hold a baseball card in my hands. I can hold that, and nobody can take that. Well, I guess somebody could, but nobody can just delete that. But a Bored Ape, I don't know. I don't know what happens to it.
Yeah. There is this, with the advancement of the ecosystem so rapidly, when I say rapidly, I'm talking about just the past 3 years.
Yeah.
There were so many projects that came on board. I think we tended to forget that, but then we also, as I alluded to this morning, forgot about how we build security and trust into the system, right? The fact that those NFTs are represented, for the most part, typically in an Amazon S3 bucket,
Yeah.
right? So if I'm going to have value to those NFTs, I need to make sure that I'm actually securing the infrastructure
That's right.
in which that exists, and reviewing the security of the smart contract or the
Right.
digital autonomous corporation or the digital autonomous organization. Where do you see, from the perspective of the DAOs or DACs, kind of the first emergence of value what would be some of the most productive things that we autonomize on the blockchain?
I think there's simple things like I was just thinking about on my drive here this morning. I was on the 267 toll road, and that little toll tag, that easy tag, that's kind of like a little DAO. It's a little smart contract, right? Like it's going to deduct every time I go through the toll tag. It deducts, and then I see on my phone I get a thing that says, we just moved $140 back into this because apparently it's $10 every time I go through that thing.
$7.70 right now.
Yeah, it's just crazy. So, but that's kind of like a little smart contract. But think about things like your fridge, right? Like, there's this idea that at some point we're going to put milk in our fridge, and then we're going to extract milk from our fridge, and then it's going to order milk, and the milk's going to show up at your door, right? That's a smart contract. Like, and do I give my fridge money? Do I give my fridge a token? Do I use US dollars, or can I use a Whole Food token? Can I use an Amazon dollar whenever Amazon does it? So I think that there's going to be autonomous organizations that are built. So a corporation, somebody really defined this really well. Like, there's many ways to define a corporation, but one of the great statements is it's a nexus of contract agreements. That's what a corporation is. You can think of a government the same way. But to think about not having a human being make a biased or unbiased or tired or unfed decision. You think about courts. They found that judges issue more severe penalties before lunch because they're hungry. They're tired and they're hungry. So if there's a case that has to be heard just before lunch, a judge might issue a harsher sentence. Now, what if you had an algorithm that doesn't get hungry, that's able to kind of do that, right? So that there's a kind of like a use case of it. But the idea that we could maybe remove human beings with their biases and their tiredness and their other thoughts of, I'd rather be with my family, and let an algorithm manage certain things in a more uniform fashion, that has a lot of potential. Al Gore, I think there was a statement up there, right? Like the advent, I saw it, right? So the advent of Bitcoin means that at some point people are going to be getting services from their government without a human being or a bureaucracy involved. And that it's possible. It really is.
Do you think that rigidity is of value, or is there still value having the human compassion in the system?
Oh, there has to be. There has to be. I mean, there's that great example of that very first DAO that went up that got gamed, and somebody took out like a whole pile of money. Sure. And what happened is this was a permission system. So what happened is the organization got together and said, no, we've got to roll this back. We're not allowed to do that. If you just let algorithms do that, they might not have the compassion for human beings. So I think there's always going to have to be human oversight. I definitely don't want to be ruled by an algorithm.
We talked a little bit about the lack of security in the system. I'd encourage everybody at OODA Loop. We've actually been documenting all of the hacks and the frauds, and we're up to 250 incidents, hundreds of billions of dollars worth of value lost. Mm-hmm. How do we convince this generation of innovators to build security into the system, or to take security more seriously?
How do we convince the next generation
to take this generation to
take security more
seriously
Wow.
in the value they're trying to build?
Wow. So, so first of all, the media plays a great role in making sure that it exposes all of these hacks and all of these frauds that are occurring in the space, right? I don't think that the media spends a lot of time talking about the fraud and theft that happens in our banking system. I was just looking this morning. I found just on TARP, the Troubled Asset program that came out in 2009 to deal with the economic crisis, there were 360 recorded arrests and convictions in there just on TARP. So we have a system that's filled with the ability to be defrauded. Where we have problems in the digital blockchain crypto space, that the majority of problems seem to happen where you've got somebody that's either committing fraud up front. It's a deliberate act to defraud the public, the consumer, the buyer, to buy into their coin system, and then it just doesn't exist or it doesn't work. So there's that act of fraud. So how do we correct somebody's morality? That's the number one thing. And then the other side of this is where it happens in that last layer where you have to do something physical and then get it back onto the chain. So if I want to buy a Bitcoin, I have to take US dollars, go to an exchange, and then get onto the Bitcoin network, right? That last mile problem is where a lot of fraud theft occurs right there. So we've got to get people really interested in that human machine moment where they call it the last mile problem, but where you start to exchange a physical object or a real world object into a digital one. We've really got to focus on that because that is rife with fraud. And then of course there's all of the cyber threats, right? The cyber ransomware that exists. I mean, this is an area that really has to be, we really have to spend time and energy on that. And they're using things like Bitcoin to get paid.
I think the mistake that we make, and it's been a frustration for me, is the internet obviously has been an unbelievable technology, but it wasn't built with security in mind. And if Vint were here, he would agree with that because we've talked about it in the past. But we know that these technologies are going to be foundations of trust and economic value. The same type of thing when we started introducing IoT devices into our homes. We knew they were going to be important because we're letting them into our homes, but we didn't address security. We see the same thing with AI. We know that AI is going to be important for us personally and in the enterprise, yet we're not addressing security. And I think we see the same thing here. So, in that regard, maybe the increased regulation, the increased exposure to the fact that the fraud exists in the system, the fact that I think during a pandemic we had this wild, wild west moment where everybody was at home and you could just create the coin flavor of the month. So how do you feel, as the second to last question, about the regulatory environment? Is there a place here for the government to be regulating this to try and build additional trust and security, and maybe security is the wrong word, but accountability into the system?
I hate to say it, but yes. So I think that if we're going to have something that's going to have this much social impact, I mean, the idea that we are eventually going to move to a digital dollar. It's happening, right? So I think that, and in competition to that digital dollar is going to be the digital assets that exist everywhere else, like what's going to happen in Bitcoin, what's going to happen in Ethereum. There's a country, Japan, you're all quite familiar with Japan. Japan has the most advanced regulations right now on crypto and blockchain. And that country has a lot of innovation. There are a couple of other countries in Europe, Switzerland, and Denmark. They have very advanced regulations. Their governments have really thought this through. The first hint of regulation that occurred in the United States, I think, was 2014, when the government decided that Bitcoin should be treated as a commodity. I mean, we all held our breath. Anybody that was in the community back then, we held our breath because we didn't know what was coming out. We didn't know that were they going to call it a currency? Were they going to make it illegal? No, they said it's a commodity, and I think they were right. I think that they were right, but that's kind of all they did. But right now, we're about to see, and I think we started to see some regulation that's coming out. They're asking the banks, because the banks have really paid attention now to crypto. You can get your 401k, you can have crypto in your 401k, the banks will hold your crypto and they will lend you money against it. So there has to be a form of regulation. We have to start treating this commodity, this asset, maybe even this currency. We have to start treating it in the same way that we treat other things. And we have to start letting the wild, wild west and the snake oil salesmen, we have to get them out of the picture. Because people are investing a lot of time and energy in crypto and in things like Bitcoin. But they're also investing a lot of time in blockchain. And blockchain also needs to be regulated, because blockchain and crypto can be two different things, right? You don't have to have a financial reason to use a blockchain. So some of that has to be regulated, because blockchains, especially the permissionless ones, are very public. And I don't think people know that those are not private, those are public. You can go out there and read what's in a blockchain, and you can decipher what's going on in a blockchain. And so we're going to have to come up with some rules and regulations about what that means, because do you really want your private medical data on a blockchain? And we're going to have to come up with rules about this.
Excellent. Thank you so much. I know we're bumping up against our break time, which is always a dangerous proposition. We're standing between the audience and ingesting all these ideas and caffeine. Sure. Thank you so much, and look forward to further conversations throughout the day.
Thank you. You're welcome.
Thanks.
Thank you.